All right, so what we have today pretty much is we're going to try weekend, and we currently don't have any existing market that is currently over in the crypto, and we want to trade that shit. So what we're going to do is actually use our strategy into a simulation environment so we can quantify and perfect it. So for that, we need an Excel sheet. See, I recommend is copy our Excel sheet, make a copy, and use up any of the days, and download the demo version of Forex Simulator, for example. And what we're going to do is a new simulation. We're going to use data from do this copy in Switzerland here. So we're going to use euro US dollar at 2021. So this picks up the last 5 years pretty much. We want to do is set it up properly like this, and this allows us to actually trim the results that we currently have. So commissions per lot currently in Vantage is $6 per round trip. Leverage 1 to 100 US dollar. Okay, what we need to do is actually use EST time, because this strategy requires us to actually be aware of New York time. So we can map several different things. So, this is the initial configuration. So we started, right? So we have the chart here. We don't want to see this with this, so I created a tiny template that looks a bit better. Object lists, we don't want objects at all, so we just want to remove all of this stuff. And we want to drop into the M15 chart. And on the M15 chart, so this is pretty much the simulator. There's a play where you can, like FX replay, forward or backwards, or even trading view replay button. But this has a lot more to it than it currently provides on trading view and so forth. So risk percentage, we want visual mode on risk. We want to use is the account status, pretty much. The sessions are very nice because in here you will see our entry point, which is going to be overlap with Tokyo session, London and Tokyo at 3 a.m. based on our strategy. You'll see this moving as we actually move the actual slider forward, so we'll be very aware. We also want to see the news. So these are the news mappings that currently exist for this day. And what we want to do too is we can pick up the news chart that were in the past, in this case in 2021, and trim just high impact ones. So at 3 a.m. our time, there is not going to be any news, only at 8:30. So this trade is going to be very nice. So let's go to our university where we actually have the course that we currently spin and we currently teach. So with the procedure that we currently have in place, and we did so much videos on this, it's ridiculous, but let's do it again. So this is the course, foundations, the curriculum, what it currently has, how many weeks does this actually take more or less. This is the content. It's quite some interesting stuff. A lot of market structure, very important. A lot of risk management and required software, so we can all get acquainted with this. And that's me. And reviews, please join in. I'll love to have more reviews. And we continue, right? So I want to, at the same time as I do this, I want to go through the actual course procedure. So this is procedure. So what do we have currently? We have, let me try to change this to dark mode because I prefer it. Much better. I don't know. Put this here. Not good. Yeah, maybe dark mode is not, but for this is good, but for the, well, let's use this. as of now for darkness. So currently, let's identify Asian breakouts in manual mode, and this is if we're using TradingView. We developed an algorithm indicator that just maps it automatically, but in manual mode, we need vertical lines from the previous day at 20 p.m. and 1 p.m. So let's map that out. So poof, 20 p.m. There we go. And 1 a.m. 1 a.m. we're still not there. So at this point in time, if we were right here, we don't even worry about this at all because we don't have the range of Asia completely mapped. So let's give it a quick move until 1 a.m. of the 14th, so we can just map the range. And there we go. Now we have a range. Let's move a bit further up. There we go. Pause. So we currently have 8 o'clock, previous day, 1 a.m. 8 o'clock, 1 a.m. Now, what do we need to do? Map the highs and the lows of this range. So we're going to do so with this because it's just it's easier. Down and the low of this range. It's already been broken, the low of this range. All right, so we got low, review the red impact news releases. So we go and see the news. We don't have any red new impact releases only at 8:30, and currently it's 3 a.m. New York time. So if we check what would appear here as problematic in our side news, these are in the past, and in the future it's still too early for us to be able to actually proceed from here on the show. So, all right, to the next event. It's 7 hours and 5 minutes. So this is very useful because you can really map fundamentals, critical blow up red news follow reports into the existing scenario. Also make sure that you see where we are here. So we're waiting for London overlapping with Tokyo, beginning 3 a.m. And this is where we're gonna hit it if something doesn't happen before. And this something doesn't happen before is like set up your MT5 workspace, prepare the sharps, magic keys, and so forth. So we don't have ticks at the moment. We don't need to align and confirm with the M1 time frame. All right, we're going to bypass that. We're going to wait for a market structure shift and CISD, so change in state of delivery on the M15. We're on the M15. We're going to stand on M15 chart and wait for one of these clear signals. Middle time frame, so M15, POI, point of interest, being hit above or below the Asian range. And I signed it here as this is a key to have in consideration. So what does it mean? Above is this, below is this. The market seems to be moving below already, broke the Asian lower range, right? Below the Asian low, we have an imbalance, an FEG. This is a POI on the mid time frame. This FEG, for me, the market is going to try to reach the FEG since it's already broke liquidity of the Asian range, and it's going to move up counter what it just did. Let's validate this theory. So we map the FEG here, like so, very smoothly, and then we start mapping. So let me change the colors of this because otherwise it's completely obnoxious to see this like this. So properties, let's put it like, I don't know, purple. Okay. And here it would be nice to do the same, maybe. Properties, you know? Purple, purple, purple. Here. So FEG, right? There we go. Let's drop into the 5 minutes so we can actually see if we can actually see the FEG properly mapping. So that's the FEG that we mapped on the M15. I would reckon that it might eat this bit too. But this is the 15-minute chart. So this is the 15-minute FEG right through there. So right now, we already hit the FEG, as you can see. Let me put this a bit lower. From here to here, here. FVG space. The price breaks down Asia right here, hits the FVG, and should start spinning up. Normally, the FVG is divided into main areas: continuation of the price and uh, and the price reversing, right? So the reversal of the price. So price is coming in. If it hits below, takes the whole FVG and breaks it, making it making the FVG non-compliant. So the price needs to continue. If it hits just a tiny bit or below the 50% of the FVG range, there's a great deal of probability that the price is going to revert. So what we have here, two confluences. First, price broke Asian range low. I don't know the time. This is 14th of the 10th, 2021, 1:24 a.m. Between 1 a.m. and 5 a.m. normally, this should happen. So you should have a trade. The good trades, I think, between 1 and 3 a.m. are the best. That takes around 1 hour consistently. So what do we need next? Price, okay, this is correct. Being hit, it is hit. And now what do we need? Bearish or bullish market structure shift. So, okay, our CISD. For this, for CISD, we need to see the stop being broken. So we'll see an engulfing candle on probably here. So for that, we need to slowly pace it. And I'm going to put this here, right? So we can have this pretty much orchestrated in a way that we can proceed. Okay, so the price came back down to the FVG and started to create a CISD. Boom. From here on, I'm expecting the price to reach new lows, but this is on the M5. And as you can see on the M15, it's a CISD. So the engulfing pattern there, we dropped to 1 minute. And we have a lot of good things here to see. So first, we have the top of the Asian range, and we have the low of the Asian range. I would like to use a pending order for this purpose. We want we just come into the market when it actually enters this FVG. I would reckon that the price, the appropriate level to enter this would be here, which is half of the FVG, right? And from here, stop loss here, target this time. Let's see how it works. So let's do buy. What we need to do here is actually understand how this works. So this is the actual take profit. This is the actual stop loss. So we're gonna stop loss there, and with the TP there will give us a risk reward of 1.93 at this current price. What we're going to do is wait for the price to come into our level, then we will have a greater risk reward. And this is so important to map. Our risk is 1%, always, in this case, okay? We're going to cancel it, wait for the price to drop toward the level that we consider valid for our entry. CISD taken. In the meantime, confirm the LTD presence of an FVG. This is correct. FVG is correctly there. So we have an IFVG, which is an FVG that was a bearish FVG that translated into a bullish FVG. And now we scope our entry. Minimum 3. If we have a less than 3R, do not do the trade. Break even at 2. We're going to bypass that. All right. Exit at Asian range trail. All right, so it's really going up already, but we have faith that it's coming back down to our entry point. Oh, we go. Maybe a bit more up. No, will be good. There we go. Boom. So right there, we're gonna buy exactly the same way. So stop loss here. Take profit As you can see, when I move the take profit, you see the risk reward being changed according to it. So for the current price, for the stop loss position, so if I just move the stop loss right now, it will granularly increase or decrease. So for this case, since the FVG is here, I don't want to see the price coming below this kind of like this. So for that purpose, I lock the stop loss more securely here, which gives us a 4RR. If you want to go a little bit the riskier side, 5R, entry price there, beautiful entry, scoping target. Asia high. All right, let's accept. We want to see the trade live. So this is the similar has the trade stuff that we currently have on NT5, so the terminal. So we want to see the stop loss in pips and the TP in pips too. See what happens. The commission values that we set are very well calculated. Take profit is 11 pips, with stop loss is 2 pips. This is sick. The size of the lot is 45 lots. Now we can link it in real time and see minute-based approach. We can also set up auto break events, trailing stops, but let's try to leave the extra aside and scope what we currently have. So I'm going to move it a bit faster so we can perceive what currently happens here. So the price really digs into our level in a beautiful way. It does not pass much more above 50% of the FVG, more or less. And what happens next? It gives a quick kick on the Asian low again and starts with the CISD displacement. Let's see if it breaks the top. Boom. So the stop is already broken this range, and you notice that market structure on lower time frame is starting to build in a bullish way. So reversal. Market structure shift confirm. Ooh. At this point in time, we stop here and we analyze what we have. So this is all very nice. Statistics, market and pending, and so forth. Trades, news. How do I see trading profit? 11 hours. So we need to, okay, change it like this, I think. Okay, so in here with P profit and loss in pips, we can see, it's nice to see how many pips we're currently at and the amount of P&L generated at this point in time by this trade. Right, so I think it was a 5-hour trade, I don't recall, but take profit is 11.2 pips, and we see the calendar here. We are not even at 3, but we have the opportunity to come in. And the correlations checked all the boxes, M15 POI, and so forth, according to our plan. So let's see what happens. So this is the important part. Normally when it reaches 2R, I move the stop loss to break even plus commissions, which are in this case this. So I don't lose anything, right? Safe risk the trade. At this point in time, the trade is at 4,000 P&L, so it's a 4R. And there you go. So beautiful entry. And this is exactly what I mean with our strategy. Go to history here. You can see the open price, close price, initial TP, and all the details. Duration is 1 hour. The drawdown was 1.5 pips. Right, so I can put the drawdown in currency, which is 0.6%. Right, commission, pips, P&L. Crazy. It's a 1 to 5. 1 to 5. Does it take a lot of time? No. One set and we're done. We monitor it from 1 a.m. to 3 a.m. See if the conditions are valid. That's it. Trade is done, right? So statistically, what do we have? Realized profit and realized total profit, absolute drawdown, almost reach 1%. Maximum, because what is considered here that is not considered in TradingView, which is very interesting, is spread, slippage, and that is very important. As you can see, the price reached here, but we're not measuring the slippage, but there is slippage and spread involved in this. And this is very important because the price might be here, your stop loss might be here, and with the spread, this margin here, which actually is from here to here, 7 points. So it's significant to assume that it will be safer to put it here, have a bit less RR, but you protect yourself against slippage and spread. Now, I recommend using raw ECN accounts exactly because of that, because this is really tight what we do. As you see, the trades, I mean, we have a stop loss of 2 pips. Sniper entry here. And it's pretty much the scenario, right? This works better with a pending order, slippage, and so forth, and with futures, because there's no spread. I'll review with this consideration in mind. So there you go. This is what we did, and this is how we progress on this trade. So now what do I do is I would come here to our tiny journal. Euro, US dollar, result, win, RR. We have, well, 5R, right? 5R. 5R, PNL 4999.50, commissions minus 272.70. Model 1, entry model 1. Date is 14th of the 10th, 2021. Session is London. Alerts, no, this is all manual. Yes, it hits. Let's change this to 2R. FEG present, it was present. We saw middle time frame PY, FEG imbalance. Where we entered from. And there we go. We have the first trade pretty much. So we want to vertically link this so it can be proper. I fucking hate these things. It's swinging all around. So commissions, P&L net with the commissions 4726. Is this correct? What we currently have here? 4726.80. Look at that. Right? Exactly. Gross profit, that was it. Profit factor 172. Number of closed trades. Profit trades 1, loss trades 1. So why closed trades? Because they're mapping the actual round trip, the buy and the close of the buy, right? So this is quantified too. Opened by the user and closed by TP, balance, we did 11 pips. And there you go. Now you need to have a broker that allows you to spin a good deal of lots. This is not your problem. If they cannot give you the lots, change the broker. Some they don't deliver what is required for this strategy to work because we do with lower time frames and tight stop losses, which increases the existing amount of lots. Also gives them a good commission. So for that purpose, it should be good depending on the technical side of things. But that's pretty much it. And I think this kind of ends day one. Let's do the 15th. So today is Thursday, the 15th. And let's do it all again and map another bit. And so here we are at 3 a.m. on day one. So now we're going to move to day two. M15. We're going to do this. Right. So let's move it a bit faster, right? So we can see the 14th, 15th, which is going to be a Friday, right? So whatever price does as of now, I'm not slightly interested for this purpose. Later down the road, there's other models that link Asia to London to New York. And these, we will see why the prices reached here and why the prices reached other, so New York distribution and so forth, which is beautiful at 9:30 actually. So let's see, 9:30. You can see the time moving here. It's pretty decent. So we're interested in London 7-8 mapping the actual range. So now starts the range and 1 a.m. There we go, Friday, 9 a.m. 1 a.m. So we pause this stuff, go back. There we go. Where are we? Friday, 1 a.m. So we can map already the ranges. Let's just clean the chart from the previous objects that we have there. So we just select them all, delete them all. We don't have anything on the chart. Very simple. And we come here and we map. 8 o'clock. It's easier to do it in 15 minutes batches because the time here moves in 15-minute periods. So if you put a vertical line, it goes 15 minutes. 15 minutes. So we currently have the lower low here, and maybe, just maybe, we can actually don't seem to be able to hit this very well because I want to see the wicks of the actual candle, and this is where MT5 sucks for analysis, and compared to TradingView, you get more options, but you can do this in TradingView, and then live you can actually do it properly. So 1 o'clock is right there, and we have a range, the top, the low of the Asian range. So we're going to map these guys out, right? So the top, same process. There we go. I like this template, so we're going to save this template as BQT1. Okay, there we go. So we can preserve the colors of the lines and so forth and the structure of the graph. And now I would like to see actually, where is this vertical line? Object list, vertical line here, properties. That's perfect. So we can actually see the wicks. Otherwise, we don't see the wicks, man. Even like this, we don't see the wicks. It's okay. So now let's do the same, right? So what we have? We have a range. We have 8 o'clock, 1 a.m., Asian top, Asian low. We need to find a POI above probably Asian high. POI, this FEG is done. We have a new FEG here. Let's map it at the top, the lower part of the FEG there. So when the price comes into here, you guys know the drill. Actually, I'm going to change this to a different color so we can see it a bit better. All right, and this one too. And this FEG range, POI. So middle time frame, point of interest, FEG. right. So, what are we waiting? Where is our trading notes? We got the POI mapped. We found it. It's there. I think this is going to be hit. If that's hit, we're expecting a reversal within this point of interest down. For that, we will need to consider a market structure shift and CISD, lower time frame. That's it. So what do we have? We have 102. Let's see what the price does very slowly. And let's see where the price goes into. At this point in time, it's 2 a.m. and 3 a.m. There we go. 3 a.m. What does the price do? Almost reaches our POI, and there is a beautiful candle there. Almost. And I would still wait a bit more. 330, 340. We didn't check the news. Very important fact. News. We have news here. 8:30, critical news. We're gonna see what is going on. 8:30, 15th. In 4 hours and 31 minutes. All right. The price went into our amazing POI. Look at that. Look at that. Oh, the price doesn't go. Nah, the price doesn't go. There's the price of the fucking POI. What do we do now? We look, drop to M3, and what do we expect? A reversal in the price. Reversal in the price means that this FEG must be taken. For a CISD, market structure shift, we expect this low to be taken. Actually, on the M15, this low to be taken, but I would consider this low to be actually low. Or CISD, we need to see an engulfing candle taking this whole FEG down. Let's see what happens. Price still eating the FEG, completely repriced the FEG, coming down as expected. Look at that. God damn. Beautiful. So now what kind of entry possibilities do we have? Let's see. M15, we have the price, but this is the wick shouldn't be considered for CISD. So more information here, but you can expect the price to start collapsing pretty much at any point in time. So as of now, we have a probable entry point, which is this guy here, targeting TP. We have it there too. We would wait for the price to reach this level. If it passes this below, I would be considering actually entering directly. Let's see what happens. If the price moves a bit up, boom. All right, there we go. So this is our sell. This is a complete market structure shift on this level here, and a CISD in your face. I hope you see that. Market went into our mid-time frame POI, checked. Market created a market structure shift, checked. CISD, checked. What do we need now? Scope our entry. Where does the price gonna probably enter from? Price might refactor this FEG to 50% and enter. You can enter from here, targeting the low of Asia. So for that, which is here, low of Asia here, stop loss above the candle here to be safe. And you still have a 3-hour approach, can be a bit more wild. 4-hour approach, let's be safe on this situation. I still consider it could be going back up to take that top, but I don't think so. I'm going to use a really tight stop loss, which is 4 pips stop loss as of now. The price is firm there, but I would be waiting for the price to go a bit up, right? So we need to wait for the price to actually move a bit more. and starts taking that FPG. Ooh, by the way, I think we should have entered CISD staff directly because let's wait a bit more for our entry because I think we can still have an interesting entry. No, it completely goes down on our faces. There we go. So, price came down 6 a.m. at this point in time. The price, well, we could have entered directly here. I mean, this is pretty damn good. And if you put it on 1 minute, uh, I would enter here. I think this would be a beautiful entry right here. Right? Look at that. Displacement candle breaking the low. This is the actual market structure shift on this level here. Creates an FEG where you can enter from, stop loss here, boom, you would have great return. Now what I'm doing is not the correct, most valuable way to do it. So I missed that entry, waiting for the price to return to this area so that it can continue collapsing. In the meantime, we need to monitor the news. We're 2 hours from high impact news on the US dollar. Not good. We want to enter from this area right here. Price needs to be a bit more flexible on us. There. A bit more. There we go. So we sell. From here, we still have a massive gap. I should have entered there, but it is what it is. So right here we have a 3 to 6 R. We're going to accept this and leave it to our fate. So let's see this on a 5-minute basis. This is what we did. So we see our trades too, right? So we currently have 1 APNL percent, but we're scoping more, of course. So there we go. Continue. Boom! There we go. Oh my God! Look at that. Ah, that was so random. I didn't know that this could be happening. So, and this was a 1, 2, 3. Let's see. Close trades. What do we have today? Oh, 1.3. Took a long time today. We should have actually performed better directly from this FEG on the 5-minute, right on this tiny little wick here, and we didn't stupidly, could have been much more R. It is okay. We still had an entry. We scoped our entry based on the FEG that it was delivered. We entered on this FEG, and there we go. Was it the best? No. Were we profitable? Yes. Now, let's pause this. It is 8:30. And the price movement was delivered by the actual at 8:30. I think it was here. It was directly done by the actual the news, I think. Right. So forecast was -2. Actually, it was 0.7. And since we are in the US dollar, the Dixie moved high, right? Because it was good for the currency, for the US dollar, right? So US dollar 0.7, forecast -2. It was actually above, means that they're good for the currency. Dixie goes up, euro US dollar, since we have the dollar in this pair, has the quote. What it does do? Shoots down. It's negatively correlated to Dixie. Very important to understand. This is this part. In this case, we're not dealing with the Japanese yen assets, we're dealing with the US dollar pair. Correlate the bias with the US dollar Dixie. This is what happened. So what do we have? We have the stop loss of today. We have 5 pips. That was very large. We have 2. What do we have? We have 128 of commissions, so we dropped on commissions. We had the drawdown of 8. With spread, we had P&L of 3 R and 21 lots, not very big, which is pretty decent actually, but I don't care about the lot sizes. I care about risk, not the lot sizes. Drawdown 4 pips, pretty much. Almost. Let me see here. Drawdown 3.9 pips, and our initial stop loss was 4.9 pips. We were 1 pip away from being hit in the stop loss because, if I recall correctly, we put the stop loss. This is the 5-minute chart. We put the stop loss really like there, some like here, some stuff. And this is the difference. If we measure it from here to here, we see that it's 11 points. 11 points is 1 pip. If you don't know this, baby pips can help. I will provide information if you reach out to us to Discord and so forth. We'll help you out gladly. But dude, this is basic information that you should be aware of before you start doing anything regarding trading, right? So we currently day 2, and we have 4, 5, 6, 7, almost 8% P&L on 2 single trades based on our strategy. So statistically approach, what do we have? 7804, unrealized profit, nothing. It's all closed. Absolute drawdown, almost 1%. Almost. Unwanted when trades closed. So gross profit, profit factor is not calculated properly because for it to have more data, it needs for us to have a loss, and we don't have any loss until now. So we have a 100% win rate, long trades, lost trades, lost losing streaks, and so forth. Commissions, we're at 400 statistics. And we're at 1,800. Our trades, history, and that was day 2. So now what we do is we evaluate the trade, see how it went. It went exactly as we mapped it up initially. So there we go. Okay, the entry was a bit tricky. Nevertheless, I mean, this was really good. This was really good entry. The entry could have been really, really appropriately taken from there instead of there. But it is what it is, right? I was not counting that the price would completely reprice the FVG. I was trying it to understand if just hit it a bit and then flash down. It did, but that's why I considered the stop loss a bit higher. So with that, correct. This just for a reference. This is the demo version. I can only do 4 trades, and this is why I'm mapping my trades here. So what we do now is we do copy this. We pick up our trades. So right, close trades. So the second trade was 3.2 P&L. So we have 3,205.50. Commissions minus 128.22. Model 1, blah, blah, blah. This is the 15th. So we just change this to the 15th. London billed as exactly the same. Second trade, net 7804. Statistics 7804.8. Commissions 400. Commissions, I don't know if you can see the commissions here. 492, exactly the same. So there we go. I mean, I think it's fairly to say that we have an 8.21R on day 2. And that's the wrap for day 2. Right? All right, so let's go for day 3. We need to clean this chart. It's a complete mess of weird stuff. Delete all there, deliver a clean price. We don't want to see trade history. Okay, it doesn't seem to work very well. So what we're going to do is, again, M15. And the next day is Saturday. We don't trade. Sunday we don't trade. We trade Monday. There we go. Okay, my bad here. There we go. Saturday, Sunday, Monday, 1 a.m. So, pause. What do we need? We need to map Sunday, 8 p.m. to Monday, 1 a.m. Same old, different day. So, what we need is this, and 8 o'clock, 1 a.m. Top of the range is here. Low of the range is here. We got a range. Now we need the POI. Look at that. There we go. I think we have our POI already met. Let's see it on the 5 or probably on the 30. There it is. See how it's important? Sometimes you don't see it on the 15, but on the 30, there it is. So what do we need now? FEG here, mapping POI, and we do it again in purple. So at least this is the logic that I would use. I don't know if it's going to work or not because I didn't do this before. So there we go. This is exactly raw as fuck. And this is the scenario. So Asian range is mapped. We got the highs and the lows. We got the M15, in this case M30 high time frame POI, point of interest, where the price needs to go for us to enter and take this high. Now, does it make sense? Yeah, there's a lot of imbalances here. But we have an order flow that is very bearish. See, there's a lot of FEGs that are being left and not taken even. Nevertheless, let us see how we do today. Now let's analyze the news. So we got it. We mapped it. Next is economic events, news. What do we have today? So today is the 18th of the 10th, 8:30. Australian dollar GBP CAD at 3:30. This is on the 22nd. I'm not interested in this. So this is probably Wednesday. Next event in 19 hours. So we're free to trade on news. There's not going to be high impact news that we can say that they're going to be problematic. So sessions. It would be nice to see the sessions. No, I don't know where are the sessions anymore. There they are. Okay. So what do we want? We want to see price coming into this and create a market structure shift again and CISD. So M15, play slowly. Boom, there we go, beautiful. We are in our POI. Let's drop to M5. M1 is better, I think, for this purpose. So this is the FVG, right? Asian low, Asia high, and we're at around 50% of the FVG. Now we need to see this high being taken, being above, and normally creating a FVG. So we need a displacement candle that creates a market structure shift and a CISD engulfing this previous candle. And with that, we expect then the price to retrace into a delivered imbalance delivered by that displacement candle, where we're going to enter from. If that doesn't happen, you can market order directly up there. Stop loss here, and let's see what happens. Now this is M1. Boom. Beautiful. Still a bearish FVG. There we go. I don't see a displacement candle that I can consider. That was nice. And the FVG from M30 isn't being respected. We're currently at 2:51 a.m. If something is going to happen, it should happen now at 3 a.m. So let's see what happens. Now, minute 3, we still don't see a displacement candle that I would see. There we go. Now that's a displacement candle. On the M3, probably go. There we go. That's our entry point right there. So you got market structure shift, you got CISD, boom, on AM5. Look at that. We're going to enter here. I hope this makes sense, right? So what do? Buy order. This is market order directly, right? So profit, stop loss. This candle, if it comes below, it can come here indeed, but I will be keen on seeing the price routing up. With this setup and this price, right now is at 3.71. I'll wait a bit more for the price to come more into the FPG. Also, I know that this is a propulsion block, and I don't want to wait for it to, it already came down, and then there's this bit already inside of this SVG, FVG, and this is why I would just take the market order. Is it the best approach? No. We're going to take the most RR? No. Is this fear of missing out? Yes. See, correctly, you would nail the entrance at 50% of the FVG. That would be the best approach for this entry point. For that, you need to wait. You can miss the trade if you do not, if the price just continues to flush up. So to bypass that, I enter right now on market order. And let's see our trades live here on super cool. So let's see the size of our pips. On the stop loss is at 4 pip, take profits is 15 pips, so we're above 3% R, 3R. We're using 1% risk, as you can see, visual mode, target, stop loss. Looks very interesting. Let's see if the price would give us, it would give us a beautiful entry actually, whether directly refactoring of the FVG, and then let's see what happens afterwards. Probably I'm taking on because I was too dumb to actually, and let's see. Well, it is what it is. This point in time, you should be, we're at 3R. At 2R, we should have been already at break even, so stop loss to break even, plus commissions, so 150 commissions, and lock it there, lock it there. So at this point, I do trailing, so I would put the stop loss here, wait for it to go here, waited for it to go here, and now I would lock it at this point. I would be locked at this point, but I'm expecting it to still target the high, and it doesn't target the high. It's gonna lock me, so I would be completely pulled out directly here. You see how this works? Well, it's very important to lock the price below levels. So that's the scenario. Boom. So we didn't lock it, and this is the scenario. There we go. We had our first loss. Could it be a win? Yeah, we had 3R in our hand. Normally I would take it at 3R. Do we currently have a loss? Yeah, that is okay too. So let's see what we currently have. This is very important. Maintaining the losing structure of a set. And this is why it's important, right? Because if we continue with a 1 to 3 minimum approach, long term, it's a very profitable strategy if you have a win rate above 30%. We currently have a win rate of 60, 70%, 75% with 150 trades. So, yeah, this would be also a break even, or I would take it here because the trail would be around here. Nevertheless, it is exactly like that. So this is the scenario. -1 in the chart, statistically proven. What do we have? So we have 6572. We got profit. We got expected payoff, profit factor, and graph. Got a tiny little DOS in the equity there, which is kind of nice. That's very good. So this is the importance, and this is why it's so important to actually backtest and practice, because when you're live, you don't want to have doubts on what to do at this point. You're going to close it at 3. You don't give the market money back. You close it at 3. For that, or you trail, break even at 1 or at 2, trail, each pullback, trail, pullback, trail, pullback, trail. Comes down, you're safe. Here's risk-free and you're ready to profits from the market. Do not let this happen. I'm still figuring out how actually to do it with this simulation system, but it looks pretty decent. I mean, this will really give us a good understanding of how to play it. And equity-wise, we're still at 675. So let's map day 3. So here, US dollar here. Let's put it exactly like that. So it's the loss. Was it according to the procedure? Yes. Could it be better? Yes. Could it be improved? Yes, we need to improve the actual active trade management in this case, right? So this is exactly the conclusions that we have. And if you don't review it like this, and if you don't see where you're failing, you will never have the chance to improve on it, and you will keep on doing the same shit all over and over again. So this is why this exists, so you can pick up your losses. Everyone does wins, right? This is not what I want to see. Everyone show me their wins. I want to see your losses, and your losses being consistent with 1% of your equity. And this is the most important part. And then refactoring and understanding the problem. Why is this happening? The root cause of this issue, and refactoring it, improving it, is setting up a specific rule within your plan to actually nail it down and bypassing this cycle. So you will be more consistent. And this is the thing. You will need to learn from this. So trades, close trades, third trade. There we go. So what we have? 177.72 minus 153.96. Number 1. Day is 18. All right. So how do would we document this loss, right? So this is very nice. So how would we document this? So price reached 3R and did the trail or TP. Let the price move. Let the price come to SL. Let the price to SL. Price to SL levels. Yeah, so we can actually increase a bit this stuff here so we can have a bit more decency and understanding what's going on. Price reached 3R and didn't no one else, I didn't trail it or took profit and let the price back to SL. There we go. This is why the loss happened. Are we worried? No, because our wins are pretty brutal compared to our losses. And this is why risk management is key. And so here we are with our amazing proficiency. Not that this one is really bad, day 3. Do we suffer from it? No, because we already have the back testing that was required for us to understand that on the long run, we can have a lot of losses and we can bypass them with a few wins. and be consistently profitable about that. So don't worry. Worry when you have 20 losses in the losing streak. That's concerning. So let's go for day 4. M15, we need to clean all the shards, object lists, we know what to do, delete, close, blah, blah, blah. There we go. And now it should be Tuesday. Tuesday, there we go. Tuesday, woo. Whoa, 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 whoa. 2 a.m. already, very, very, let's pause it. So, 5, 8 o'clock, here we are. And 1 a.m., there we go. So we want to see the price between here. I think it just took out the price range. And here, right? That will be the scenario. We need to find POI. Maybe here. The M30 is easier to understand it. You don't see shit here. POI, you don't see it. So there. I don't see a point of interest here. It's unclear to me if the price is actually going to go there or not. We could say it might take this liquidity, it might take this FEG and then reverse. Is it an A plus trade? We have all the models in. So this is A plus rating the trade. Very important. So this is A plus and this is A plus. We have also MTF delivered us a POI. Just so we know, okay? This is the previous trade, right? So we're still scoping that. And in here, for me, this isn't there because we don't have a point of interest above. We might see it in a different time frame, but I will not see it now. Where are we? 4-hour time frame. I would say that the POI could be that 1-hour time frame. All right, we could have. I mean, this is already 2, right? All right, so still, this is 1 a.m. candle right here, and we do not see. Let's see. I don't have a POI. This is unclear. Daily. Okay, daily we have one. There, from here to here. Let's. I would not take this trade. I would consider this as an A grade B plus trade. I do not have an M15 POI. I have a daily POI. Price can reach to this area and then retrace. For that, we would need to see now a market structure shift, killing this area here and a CISD raise. So we continue. With that, we see the sessions. We're still not at 3 a.m. Let's see what happens. Play. Oh, we didn't see the news. We need to see the news. 2 a.m. GBP high CPI event, which is in 30 minutes, I think. 2 a.m. This was already. All right. It was at 2 a.m. Now it's 2:30. How come we don't have the actual data? Interesting. Let me see what's going on. Maybe. Okay. Well, for us, so it's clear. Let me check again. I think it's clear. 8:30 US dollars. No. So what do we have? We have entry on that range of the FVG on the daily, and we have a displacement almost creating a market structure shift. Drop to M1. This is our entry point right there. Wow, this is going to be our entry point. So this is very cool trade actually. So we had the PY, yes. Market structure shift after it reached the PY, yes. 3 a.m., yes. What do we expect? The market price to reach here and go down from there. For that, need to wait for it to come back up. Give us the entry. That's the entry. Price is taking the FVG right at this level. So let me just delete this. Absurd. So what we want to see first, pause. We want to see the middle of the FVG being taken by a relationship on there, right? Sell. Top here, here, 9R. Crazy risk reward. Let's see it from here, this perspective. Yes, we do it. So we have the time, we want to see the trades and the existing trade efficiency. So there we go. Put it like this so you can see it better. We want to see how many pips, stop loss this time, 4. So we have an average of 4 pips per stop loss. 30 take profit is a 37 pip move that we just got. Commissions are good. Lot size is very interesting. Auto break even set. I don't know how to do this. I don't want to do this, but I think it's important to do that, but not now. For this purpose, we entered without it. So what do we want to see? We want to see this roll. There we go. Notice the 2, maybe 1 pip importance here that you should consider. Boom, still not correct. So what happened here? Price ramped up, took our stop loss right there. So our entry should be really right. We re-enter. We re-enter stop loss here. And our break even, our TP there. We still have a 12 bar right now. And there we go, right? Okay, we lost enough. It's okay. We can lose 2 trades a day, slowly. So what happened here? The session ended because I cannot trade with the demo more than 4 trades. So I did 4 trades, right? There we go. And there you go, guys. So that's the scenario. I would enter this one too. Unfortunately, it comes for the next. Right. Okay, so the 19, let's take this data out. So we're going to use this. So what we want to see is the history. And there we go. And close trades. So we got a negative 1, 2. No issue, loss. Percent. Okay, we got a minus 1065, that's 60. Minus 30. Where is the commission? Minus 159.84. There we go. That placed. So very small stop loss badly placed. Badly placed. And why was it badly placed? Because we didn't scope it properly. This is the actual market structure shift. So the market structure shift was this candle here, and we should have actually put the stop loss above this level, completely above this level. You know, not here, here, actually on this candle here. All right, so 3 minutes, this uh, candle here, right there, right? And there we go. More learning, I think, was good. So what do we learn? We learn that maintaining our risk is really important and it will make us money. That's very good. Second, what do we learn? That maintaining a one trade approach per day makes the doctor go away. Third, we need to improve on the fourth trade. At this point in time, we already have we had 4 A+ trades and 4 YA+ because it matched all what we currently describe as our course as confluences, confirmations. Mid time frame, high time frame POI. We have a displacement, we have a market structure, and we have a CISD. All these mapped. We have delivered, we have displacement. FEG was created. Where did we fuck up? We fucked up. The market delivered us this information correctly 4 days in a row. Where did we slip? We slipped on the entry mapping to, because we were very impulsive. We want to enter now. We want to tighten the stop loss to a degree where we had 4 pips, we lost. 4.2 pips, we lost. And because of that, we didn't map it correctly. And the next time, make sure the stop loss is in a level that is going to be sustained, that is going to be a strong level that the price shouldn't reach above, in this case, an imbalance level, so we can preserve the trade. Because this will be a very 10-hour trade. Still, with 2 losses and 2 wins, we have a 5% gain in 4 days trade. That's it. That's pretty much it. So what we're currently doing is obtaining this price, and because we currently locked in here, we're gonna, do a statistical approach on the previous, so that's kind of the scenario. Okay, some statistics. Right. Very nice. And there we go. See you on day. And welcome to day 5. So we currently are on the 19th rights where we cannot trade anymore because we have limited the reaches, the limit of the trading demo version. This is why we're currently taking a journal data approach, so we can quantify what we currently have and go and progress continuously from the date that we were. We just finished day 19, which is a Tuesday. We're going to move to Wednesday. So how do we do that? To close all these, and now simulation restart. Are you sure? Yes. So now we have another 4 trades that we can do. It's the 14th of the 10th. We're going to move it. The last day was the 19th, so we want to be on the 20th, which will be at 1 a.m. So let's go there. Play. What is going on? Single charts. I cannot play it. I don't know why. Show simulating settings. Start. Save. Quit. We just quit this. Yes, it's okay. Start a new simulation. Add the list. Okay, we have the starting balance now. This is very important, which is 105.3 146.96. Okay, like that. And we still have the commissions per lot, which is 6.0, right? And we want to start the simulation on day 20. And we want to use Easter Standard Time. So -4 Easter Standard Time. 100 commission starting balance. It was the balance that we had. This is very wrong here. There. No. There. There. Let's take the last two. So 10,005. 1, 2, 3. 105. So 5,346. 5,346. Right? Net commissions. So this is the value that we are obtaining from the net commissions of what we did before. So we can continue where we left. Right? This is why we took the metrics from there. So there we go. And this is dot 96 cents. We should quantify it too now. It will be important. Let's see if we can. 347, 346. That's it. Okay, we just leave it like this. 20th range. There we go. So we have the same as copy. So it's one data provider spread is variable. You can really real spread, which is great. Man, it's just you cannot trade with. If you trade without this, how can you actually know? You know, I don't know how he's going to do that. Good luck with that. So rewinding allowed and start the simulation. Want to rewind check shit. But time frames templates. We go to our template. See that we had. We go back to M15. There we go. We're on the 20th, and now we want to go to 1 o'clock in the morning. There we go. 1 o'clock in the morning. So we got the agent range done. And we have everything prepared. So let's see, account. We currently have the same amount that we ended up the previous demo with. We have absolutely no statistics on P&L or nothing, but that is already on our table. So we want to do is risk 1%. We want to do visual mode. If you take it like this, you need to input these, and you don't want to do that. Visual mode. And there we go. We did news today. 20th euro at 2 a.m. and euro, okay, we don't want low, we want high impact, 2 a.m. GBP, that's pretty much it. All right. Trades and sessions, we want to see the session as we normally did, and we want to map our thingies. So we need to first clean the chart. There we go, from previous trades, there we go. So we map 8. 1 a.m. So 8, 1 a.m. Expand on that a bit so we can understand what's going on. And we want to map these guys levels. This is the top of the Asian range. And this is the bottom of the Asian range. We got a great displacement. We got a massive point of interest there. Look at that. See on the 30 minutes. We just entered the actual point of interest. From where I'm standing, that would be the point of interest that I would be looking for. Displacement candle about to break this low. And I would just enter the trade here directly. And there we go. Stop loss there. Take profit there. It's a 9-hour risk. Accept. And we go from there. Same old strategy that we have, right? So let's put it on M3 so you can see the whole range. I think it's cool. and maybe we break even. Now what we can, okay, we go. There we go, 20th. So at this point we have 1 hour here, 2 hour here. This would be the entry point of the trade. The price might still come back because at this point in time the price is about to actually create the market structure shift in CISD and then come back to the actual imbalance that it generated. So it delivers you the entry to achieve that. Also, you have another entry right here. Very brutal, very brutal. So let's continue seeing what happens. At this point in time, let's pause. um, let's observe our trade. So what we have, a 9R, the pips in the stop loss were this time 2.3. I don't know why, but my 2 pips, man, stop losses are killing it. Take profit 22, 20 pips already done, commission, almost, I would kill it right here actually. This is blowing it out completely. So very importantly, that will be, I think, 9,343 in profits. So I mean, it's okay. We had 2 previous losses. You see what I mean? I mean, no? Hope you see it. And now what do we do? Close all directly. Don't let it swing back to you. Just close it. It's okay. You know, have a coffee thinking about what you did. You're going to be very happy with what you did. Let's just see what happens if the price would really hit it. And boom, it would completely hit it. No issue. Very good trade regardless. It was completely obscene actually. So let's obtain some metrics here. 2 hour trade, right? Um, 2 pip stop loss, 22 pip trade, 9R done, commission 252. This is beautiful. So trade number 5. It's a win. Take some metrics now. RR 9.3. Trade P&L 9,343.20. Commissions 274.8. Very happy for this commission. Did we use model 1? Yes. We use all this stuff and we learn from our mistakes from the previous setup. We put the stop loss on the top, expected that the price could have still routed here. There was the entry that was delivered here after the market structure shift in the CISD displacement candle, and it delivered an entry here. This was the entry that the price came back to into that imbalance and delivered it to you, so you could actually pick it up. And when you start seeing this, you won't stop seeing it, if you know what I mean. So this was the 20th, right? So statistics, in here, since we just changed it, we don't have much statistics, right? But these are the statistics. This is the graph. I don't understand. It's telling me that I have 14,000. But in here, right? But I have 9,000, which should be here. I don't understand what is going on. Maybe something is wrong. Balance is 114,000. Because it's still using the previous balance that we had. This is why I think this is doing this, because if we correlate this information with our spreadsheet, this is very 1144 114415.36. Okay, some commission missing thing is there, but Very similar. So we have win, win, loss, loss, consistent losses where we learn something from them after reviewing and journaling, and another win of 9,000. So I don't know what kind of model do you trade and if you're proficient with it or not. But what I'm showing you is a very good way that you can systematically validate what you're doing. And this is the important part. Validate it, learn from it, and if something to improve, improve it, and go from there, and go from there. And make sure that what you're doing, you have a structured risk management approach and a very, very hardcore enforcing it. Right? So statistics are these, close trades and so forth. Close trades, drawdowns in pips without drawdowns. So let's put it like this. Duration 2 hours. Drawdown was 0.1%. Jesus, that was good. That was very good. Not 0. It was half a pip drawdown. It's completely CSD entry style. Um, History is what we currently have, and that we've done. And that's a wrap for the day. As you can see. There we go. And this ends day 20. We're going to add a bit of description here on the entry CSD type. Very clear POI and great RRR. I didn't see any difficulties with this model or with this nothing. So at this point in time, currently have 3 wins, 2 losses. The color is very aggressive, I think. There. And we're happy with our losses. We learn from our losses. And we have a massive net return of 14R in a week trading. 1, 2, 3, 4, 5 days. There we go. Oh, not a sequence consecutive week, but it's 5 days trading. Right? So. And welcome to day 6. So this is the last that we're gonna do, but I think you got the picture by now of what is trying to be achieved with this. We implement what we have as a strategy. We verify all the steps. We see if we can repeat it consistently, and we understand our losses. We review our losses. We make the most of our losses, and we learn from them, so we don't stick on the same mistake afterwards. This is the scenario. So now we're going to move to day 21st of the 10th. So this is October 2021. So we're just going to move there, which is a Thursday. 2 a.m., 3 a.m. This was the entry already. We stop it, but we'll see what is going on. Let's make sure that everything is correct. So 8 o'clock, 1 a.m., the highs, and the lows are actually here. POY. Okay, just the POY. And expectation, price going up. If we see displacement above this candle. So what do? We wait. Sit on our hands, wait for market to reverse above this point of interest. Oh, we didn't check the news. Very important news. 21st, 3 o'clock, high news, Australian dollar, dollar. So we have 12 hours before this happens. Do we really expect the price to reverse there? It could be reversing from there. It could be also reversing from these POIs, which, to be honest, makes more sense for me. Well, see what happens? Price hit, no. It still didn't hit that. There we go. Did it hit this POI? All right, so we can delete this POI here. Invalid. This is the real POI. You see? Boom. And now we want to see a market structure shift. Displacement candle, support. There we go. We drop to entry. This is our entry here, right here. This would be actually the perfect entry. This would be another model. This would be the confirmation. So I would recommend you wait for the second confirmation for the stop to be broken. That will be appropriate. What we'll be targeting? The top of Asia. What is the current time? 5 o'clock. It's the correct time to enter. Not the best. It's not the best. Slow enter? Yeah, we're going to give it a try. So TP, Asian top, SL, below this tiny little, let's put it on M1 so we can really see what we're doing. There we go. Tight, we got 8 risk here. And back to entry. There we go. Accept. And we want to see our trades unfolding there. And we go. And there we go. Not the correct. I'm just trying to understand the price didn't deliver it correctly at this time. I don't know why. Let's see what happened here. At 1, the price created, this was the actual, I mean, shit, I mean, it didn't reverse. It just didn't reverse. It didn't reverse on London. Expect a reversal on New York at 9:30 at the time. Now it looks like a market structure shift reaching out to that point, and it completely annihilated it. So we have a trend in the actual Asian, so we shouldn't have traded this, but we did. No issue. We history. There we go. And we currently have perfect risk management here. We put it on pause. Day 21. Just copy all this stuff like this. Dang, and this is where we need to learn where not to come into, when not to go in. 4400 and commissions 264, and there we go to model B, because we entered on the model B. This is not, it was not completely correct. I mean, the achievement on the actual mid time frame, I think it would be understandable that it would be here. Now, if we already sold below the actual Asian range, and the time is at this point in time 3 a.m., would we expect a reverse up to that? No, we probably wait for that on the actual um, New York session. And because of that, that was shot in our face. So something to learn from. So we have 3 losses, 3 wins, and we have 13,000 positive. Look at that risk management. So there you go. Very simple. We entered in a B trade, the B trade. What could be said more about this, but I'll leave it for consideration. Okay. And there you go. And day 6 is done. All right. Let's see the statistics of day 6 too. So there we go. Close trades. There we go. We have 2 pips on SL. Close time was 4 minutes actually. It's cell 2. I mean, it was very bad overall run time. I mean, you should enter a trade after 5 a.m. This is against the plan. So between 1 and 5 a.m. Yeah, but we entered it very bad. And let's see really what time did we enter. We did at 6 a.m. We did at 5:57. Not nice, really not nice. So 5:55, it is not the correct time. If the trade is between 1 a.m. and 5 a.m., maximum, yeah. After that, do not consider any trade. Wait for the next step. This is the value that we obtain from losing a trade, reviewing the journaling, and understanding what we did wrong. And this will make us better, more consistent later down the road, because we're tightening our strategy to a really high proficiency level, A plus only. And that's it. Hope you're enjoying it. Okay. Currently, we have 13,000 on P&L, and 3 wins, 3 losses, 17 are done. Net 13, and that's pretty decent. All right. So let's go for day 7, I think, right? So 1, 2, 3, 7 days. So we're on the day 21st of September 2021, and now let's backtest to the 22nd, right? So let's clean again. All this stuff, you guys know the drill by now. Bang, delete, right? And when you do this for the whole month, you have great statistics that you can rely on in order to feel more comfortable executing it later down the road, long term, right? Because you might see a loss now, but that's a speckle of a water drop in an ocean on a long term trading basis. And this is the importance of trading it and making sure that you do the exercise correctly, right? So we cleaned it. We went to N15. There we go. Let's move to the 22nd. 22nd, here we go. We want 22nd and 1 a.m. this time, not at 2 like we did before, very badly. There we go. Almost 1 a.m. And 1 a.m. 1 a.m. 1 a.m. Oh, pause. All right, so let's map it. You all should be acquainted on how to do this by now. If you're not, you can see the previous videos. Previous chapters, I think. So there we got 20 o'clock, previous day, 21st. And now we mapped 1 a.m. on today. There we go. 1 a.m. is there. So we have the high and the low of the day. Let's zoom in a bit better so we can see what we're currently dealing with. There we go. Boom. High of the day of the Asian range. Mapped. Low of the Asian range. Mapped. What currently we have? We have a bearish trend. Market is trying. Now I need to find a POI for this. So we see a POI really well defined underneath Asian low. We are gonna wait for this to be hit. So let's put it on the M30 so we can have a cleaner POI. There we go. So that will be from here, liquidity there. On that to the end of the FVG, let's put it here. This will be the end of the FVG there. So we want to see the price coming down here and then from here going back up. Is it correctly with the market structure towards the higher time frame bias? I don't think so. This is not the best way to do this directly by looking at the market. And now let's look at the market and H4. We're clearly on a bearish trend. We're going to reach this POI, which we already seem to have reached with the Asian low here, but it was not 1 a.m. So now it's 1 a.m. We want to see if we're testing this area and then moving back up. Let's see what we have. So M15, and we play it moderately slow, right? So break of Asia, and this is POI. So let's change the property so we see it in a different color. Otherwise, it's too fuzzy. We don't want fuzzy things. We like fuzzy things too. Well, okay, so POI. This is also Asian low, Asian high. Let's see what happens. Let's see what happens. And since the market is bearish, higher time frame and mid time frame, I would expect the top to be hit and then reverse down because that will make a lot more sense, right? Around 3 a.m. that will be done. Let's check the news. 3:30 a.m. We have massive news coming out. The forecast for the euro is negative here and here too, meaning that if at 3:30 a.m. we will probably see if this is the forecast or the actual is lower than the forecast, uh, um, a drop in price on the euro. Since the euro is actually the base pair in our FX pair, our base currency in our pair, we will see the price coming down. Of course, if the euro is in the last quote, all of the pair, then it's going to be negatively correlated. Right? Example: JPY euro US dollar. There you go. Negatively correlated. The price there will go up. In here, the price will come down if that will be the case. What we will need to know: the news coming out will be here, 3:30. You see, this is very, very important, and this is really interesting to see. So what currently we were expecting is, according to the market structure bias, is that the price reaches the top, takes liquidity here. At this point in time where the news come out, the price moves lower, reaching to the lower low of the Asian range that we mapped, and probably reaching to these POIs here. Meaning, do we have a market POI above the Asian range? I do not see it. I see tiny little one here. And maybe that is it. Maybe that is it. What we should consider for a POI. Let's do it here. This is what I see. Let's see what happens. We want to see the top being taken. Or the boom. There we go. That was completely ridiculous, man. Now, I need to say, I did not do this before. This for me is new. The days are new. This application is new. Everything is new. Just using my strategy, what I know, how I apply it with this simulator. This is completely amazing. And this is the first time that I trade on this day. I don't know what happened here this day. Okay? So it's not cherry picked. This is directly from the gut on how I would trade this setup. We continue. We have liquidity being taken, reaching our POI above Asian range. We are waiting for a market structure shift that shows us that there is a continue 13. The news are there. Let's see, the news came out. We don't have the news. So it's higher from the forecast, but it's lower on the PMIs, on the German flash services. So I think it's higher actually, right? The manufacturing, which is the most important, is actually higher than the forecast. It's that the price of the euro is it's higher. So this is creating a bullish trend, right? I would not expect an exact reverse from this right now. Let's see what we have here as POI. We will have to wait until the price reaches that point or reverses. Let's see what happens. See if we see a market structure shift happening. And very interesting happening here. There we go. Market structure shift at this point. All right, candle already created. What would be targeting Asian low? Let's wait for the displacement candle to be completely done. And I would say that this would be my entry point right here. Pause right there. Sell. Target. I'll put it here. It's 3 pips stop loss. Come on. Asian low. 6R. 3. Is this correct thing to do? No. I would not do this trade. Yeah, I would not consider this a completely A trade because of the way that the market displaced above, and it's. Are we in the exact time that we should be in? Let's see what time currently is here. We are at 4:51 a.m. We're almost at 5 a.m. We want to see price hitting this entry point and moving lower. Let's give it a shot, right? So we mapped Asian low, map our entry, reason why, and we go from it. We have it like that, put it like this, and now we'll see the trade unfolding. There we go, pendings, and there you go. Let's see what happens. Market coming right into the entry FVG. Maybe a bit higher, the stop loss wouldn't hurt. Again, something that still needs to be improved if the price is to continue down. So we have a great displacement of breakup structure, CISD, price coming down. We're currently locked at 1% R. We want to see it reaching this level. Let's see what happens. So at this level, we would be already, in here we will be already at 2R. So this would be already at break even here. So this would be already out as break even trade. But let's see what happens. I mean, sometimes it's something weird happens. Just say. Not the case. So we lost another trade. And that's pretty much the scenario. And then what happens? Price went back up. And you see, this is the important thing about simulating. Price went up. What are we doing? We have half of the Asian range taken around here. And of course, the trend starts going up. And what do? We sell correctly there. And we did not pull the actual trade out. So again, something to learn on this situation. So stop loss could be a bit better improved, probably here, so we can take all this area and only get pushed out around, really on stop loss basis when price reaches about here, meaning that we would be able to take this until here pretty damn good, And unfortunately, because we placed a stop loss right here, we'll take that before the actual move. At this point in time, I would not come in because this would be already 7 o'clock in the morning. So this would be 7:50. So no. Still, if you open it here within the time range and you put proper stop loss, just make sure that everything is set correctly. So we currently pause this. We map our new trade as another loss because we're obviously good at losing this stuff. We still have a lot to learn apparently. So close trades. This is the last one. There we go. So how much did we lose? 1,129.80, and it was mainly because of stop loss placement. And this is what really needs to be improved. Stop loss brace placements. This was not an A trade. This was a B trade because the price with the news just completely changed the perspective of what we currently had scope. We still went in because we were testing, and why not see the result? And the result is we shouldn't have done it. We entered in a B trade. Market structure incorrect, and so forth. So with this we still got 10% positive. And right now we need to just do like this, and there we go. And that's the scenario. So we have winners. Let's do for the next trading, which is going to be the 8th trade, and we close it from there, I think. All right, trade. Scholar quits because I think everyone got the point here. So we got this, delete, bang. We need to go to the day is 23rd. Oh, wait, 23rd. This was a Friday, so we need to go to Monday, which is going to be a bit. Oh, 23rd, Friday. Saturday, Sunday. 1 a.m. What do we have? Beautiful range, M15, bang. 8 o'clock here, 1 a.m. There we go. Let's put it a bit like that so we understand more or less what exactly is going on. So 1 o'clock is here, so range top, high level of the range, lower level of the range is here. So 20 here, this is the low, this is the high. There we go. Looking for a great range. You can directly see that the range needs to be taken the top and the low. Let's see what currently we have. So we have 20 pips now. Looks very decent. And what we're currently doing is checking POIs. POI is here. It's taken. POI would be the top of this range there. Probably that would be the POI. H4 POI. We have an H4 POI. We don't have an H4 POI. Maybe up like this. Let's see from here. We have an H4 POI. There we go. I would say that this would be the H4 POI. There you go. Drop to M15. Let's change the color of these guys if we can. Sometimes I cannot change these objects properties or click it properly. I don't know why. So POI in here. No problem. We go to object list. We see the horizontal line on the H4 there. Show. We got 2 horizontal lines. 4 horizontal lines. 1, 2, 3, 4. Alright, so this is an M15 and this is an H4. So properties, orange. Okay, so that's the other one. Properties, then orange. Okay, so we have the 2 has POIs. Okay, perfect. So we'll wait for the price to reach the POI. We need to move it faster. There we go. See what happens. 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2. Oh my god. 4 o'clock. We don't have an Asian range that was broken. We have now. And we have an Asian range that was broken, and we have a POI that is just completely engulfed. Did I map correctly? The Asian range, 8 o'clock. There, this is the top. As you can see, it did not take the Asian range. It takes the Asian range lower at 3 a.m. We did not see the news too. We don't have any critical news on the 25th. So let's see what happens now. All right, so we have, oh my God. We didn't have an Asian range being taken. So unfortunately, this would be, if this would taken, this would be 59. This is would be a great delivery of price in the way that we would like be expecting it to trade. So at this point in time, this day is done. We did not trade. We did not have an entry. This is why we didn't have an entry. The daily range was not taken. and unfortunately by some sort of pips actually, um, by a few tiny pips. And did it afterwards give the confirmation? Yes, but it is what it is. So there you go. For the next day trades, so we kind of need to clean all the charts again. Object loops, object lists. So what is it? Object lists. Will not be here. We go to the 26th at 1 a.m. There we go, 26. Pause the map. You know what to do for sure. We got practice rotation too in the strategy to the point that we see it already mechanical and we know exactly what to do. And 1 a.m. is right there. Okay, and what do we take? The range high, the range low. We wait for the range to be taken now. We want to see a PY here. Do we have a PY? We have a PY right here. So we want to see the point of interest of the range being slaughtered. Right here. Let's put it like this. This fits here. Properties, then purple, bang, PY, and M15. Very good PY. And what do we do now? Well, now we wait for the market to take the actual range. Right? So that's what we can do now. Boom. The market completely annihilated the point of interest. Since we were very fast, we could have already picked it here. Market structure shift here on the M3. Not a market structure shift here, but we have a massive weight resistance that also we didn't suddenly use. Always use 26. We got AUD price, doesn't impact what we're doing. 7. So what we need to do, we're going to enter right here, and we're going to put it on M1 so we can see that we're going to enter on this candle. Let's see, price gives us a chance to actually enter from, because it's already here. Well, I'll tell you what. I will enter, this would be the FPG from here. Right, so already FPG would be taken if you're using a limit order until here. And now that will be the case actually. So from here on, it would be pretty much an entry model where we can actually use scenario. So pretty much we will apply here from here. We'll map it directly from the top of targeting the top of the range and with the actual stop loss here, like that. We'll give this a 2R pip. Let's map it to the 3R limit that we have, which is this. You can see to the 3. You can also put it here because it's 4R. No, let's make it should. So 3R, 3 actually R pip, and there we go, and we accept it. And now we're going to monitor it, and that will be pretty much the last trail we're going to do today. And let's see what happens now. And play completely out. And there we go. That was pretty much the trade that we have done today, and we should have graded it for this displacement before. As you can see, the price came back down and completely took our entry, and that would pretty much be the actual displacement from here, because then we'll be looking for the CISD here, and from there, then we would be entering profit from this trade. So something to learn from there, and there we go. So we just enter the actual loss on here. I pretty much mark those trades on that space. And we have minus, let's see, minus 6.36 pretty much. And we have 239 on the actual information, so 239.22, and that's pretty much model B because we students put a probably model A. We did not click plus. The POI was not exactly correct to the point that we can say that it was the best. But that is the situation pretty much. So hope you guys enjoyed, and still in very profitable situation here. Severe risk management strategy where we have 3 wins and 5 losses, where we actually learn from how to improve one of them, and still having more losses than wins, you maintain uh, a decent win ratio. And there you go. You guys have fun. Cheers. Bye.